Hey everybody, welcome back to the Cochran Bell Wealth and Tax Strategy YouTube channel. This is Kevin. Wanted to check in and say hello. It's been a while since we've seen you. We got through another tax season successfully, I might add you, and on to the summer months where we do a lot of our financial planning and investment management. And one of the things that came across to us this past tax season is what is tax smart or tax efficient investment methods that I could be doing with some cash that I have on the sideline or some old CDs that I could get a little more return out of. Well, wanted to bring you about 3 different ideas today. The first one is just explaining what is a tax smart investment or vehicle. A lot of times we see municipal bonds being a recommendation. Municipal bonds give us tax-free income at the federal level, and sometimes even at the state and local level as well. It just kind of depends on the entity. Other funds we look at are mutual funds that are specifically delve into tax efficiency with the portfolio managers focusing on that, or ETFs, or commonly called exchange traded funds that track passively an index. And so these cater more towards your tax efficiency for the long-term investment. But it's important to check with your tax advisor to make sure that these align with your investments. So those are a couple ideas. Another one is to match your investments with the right account type. It's important to make sure that you're taking full advantage of tax efficient investments by holding them in accounts that it's appropriate for the tax treatment. Investing in this way can help ensure that we're realizing all potential tax benefits without increasing any tax liability. Investments that generally generate taxable income, such as taxable bonds or stock funds with high turnover, may be better held in tax-deferred accounts like IRAs, Roth IRAs, or 403Bs to generate the best tax benefit. Tax-neutral investments, like the ones we're talking more about here, include brokerage accounts such as your joint accounts or individual accounts or trust accounts. If your investments don't generate higher taxes, there's less of a need to defer them. So there's little reason to put them in an account that could restrict your access to them. So like we touched on earlier with the municipal bonds, ETFs, and the mutual funds that are more tax efficient than others, is we would look at putting them in something like this with more of an investment vehicle in mind that matches your strategy. And finally, tax loss harvesting. That's a big one this time of year, and especially when you see on your 1099s. Any kind of correction in the market is usually when we see tax loss harvesting come to fruition. This can help reduce your overall income tax liability. If your investment losses exceed your gains, you can use them to offset upwards of $3,000 of taxable income each year as well, and including the losses that carry forward to future tax years. For higher income investment earners, a higher long-term capital gain tax rate plus an additional net investment income tax of 3.8% tacked on to that, if the investment income tax does apply, can make tax loss harvesting, the concept we're talking about now, even more valuable. But as always, consult your tax advisor to ensure that the wash sale rules won't prevent you from using the strategy in other types of buying and selling that goes on in these accounts. Whatever strategy you use, I just gave you 3. Remember that tax efficiency isn't the only consideration for your investment decisions. You also need to think about each investment can help you pursue your diversification, liquidity, and overall investment goals at a level of risk you are comfortable with. Tax efficiency then becomes another way to help you choose among your investment options. Be sure to consult with your professional advisor and your professional tax consultant before making any decisions that can affect your taxes. Again, this is something we deal with every day, and it's a conversation we love to have. Thanks again for tuning in. I hope you enjoyed it and got some good ideas. We'll be in touch. Bye, guys. Thanks for stopping in.